Welcome back, everyone. For those of you that are new to this channel, don't forget to subscribe. Today, we're going to cover a few of the trades we took this week. We took a big sell and a couple of buys. I also want to cover where I see price going on gold and why, so that some of you guys could be ready for what's possible this week. So let's just start off by identifying exactly where price is at this point. So we took a short on Monday. I'll show you the candle right away. Before we get there, though, we have to understand that we took out a weekly liquidity here. We got this reaction fueled by the Russian-Ukraine escalation. And then we got another reaction here, which is about to begin. And this reaction here was based on a new secretary, Treasury Secretary appointed for the States, which was pretty dollar bullish. We did have some peace talks between Israel and Lebanon. I don't think those held. And I'm going to cover where price is going in a little bit here. First off, let's talk about the short. We took out a level of liquidity here. So, last thing I forgot to mention too, where this reaction came from. So on our daily range, so this range ran inefficient the whole time from here. We're efficient here, inefficient below. So this is the last inefficient range. You can see we rebalanced here. So you can see prices reacting well below the 50. Going the other way now, we get the same thing. Price goes up above the 50. This time we're at the 618, which gold loves that number, which basically brings us to our sell. And the expectation here is to come to at least the 618. Obviously, we need the reaction, which we get at market open. So with these, you never want to take the initial reaction. So there's our initial reaction. You wouldn't want to catch that. What we want to catch is the mitigation of that. And ultimately, we watch how price behaves around the peaks and valleys. And I'll explain this in a sec. So we had a short here. You can see this perfect buildup being built. So when you start seeing this heading into a aggressive reaction and a liquidity point, you could expect the candle that's the biggest to react. This is where we pumped liquidity in. So my expectation is for this candle to be contained, matches with our peaks and valleys. This is of interest to me. So we had a daily, we had an aggressive reaction, we create liquidity, we build liquidity into it. This is a perfect setup for a liquidity cycle. So there's our reaction, and ultimately, you can pretty much execute this at any point. I believe I waited for a pullback here. Might have been a better entry on the 5, sure. So I want to say we entered somewhere around here when price started coming down. And we just kind of covered the high. And essentially price just melted. So this one was pretty straightforward. The movement was very aggressive, very fast. We had another news release during New York. I forget what it was now, but it got priced to where it was going way faster. So my initial target was around here somewhere. I think we ended up closing a little higher up around here. It's a pretty nice size trade. This was one of my bigger ones. So I want to say we closed out. Let me just see. Yeah, so we closed out before this bullish candle, so it was right around here. And you guys could see the screenshot here that we actually took this trade. All right, so now let's watch how price proceeds. So initially, my thought process was to continue shorting. I actually did short. I ended up taking a short position, which I ended up closing at a small loss and changing my bias. And I'll explain that in a sec. So also, once again, you can see how price is still respecting that rhythm. 618 reaction here, 618 reaction here of this whole range down. And the expectation is when the shorts fail to continue further is we get another 618 reaction. So I have two targets right now. First one's here. Second one is a little further down, which puts us around here. So one of these two targets to me will get hit, and then at this point, I expect one of these points to hold and continue bullish. That's just how price moves. All right, so I initially took a short here, and I'm going to talk about why I closed it. By the way, we sent these to our signals and our analysis group. So I want you to pay attention how price is behaving here. Look at where the bodies are sitting on this fib. So you can see the buy orders are sitting in the upper half of the fib. We have no body closes down here, which is a bit concerning. So initially we had executed shorts in here. This was all good. We got our first 1 hour close below the 50. The 4 hour failed. So ultimately what happened here was we took these shorts somewhere around up here. Long story short, price failed to continue making lows. And if we go back to our 4 hour, you can see we just had another rejection of the 50 here. So what this is telling us is the volumes in the upper half of the fib, and the buyers are actually controlling the market as the sellers are unable to maintain price below. I like using this confluence. It's okay on the 1 hour. On the 4 hour, it speaks a lot more volume. Here's a prime example of where price is just refusing to go down. Had this candle body close below the 50, I likely wouldn't close these shorts out, and I would have just let it ride out. So here we ended up adapting, and we ended up closing these positions. Not yet, so I left these for a bit. So at this point here, do you see how we created this build up? But then we failed to break even the substructure we've created. Watch what happens here now. Price starts coming up, and we're no longer respecting the buildup we created. If we go back to the 4 hour, you can see where price is heading, and at this point, we expect price to close above the 50. And if you look at here, we've now gone a fib level above 382. So which is around here, and this is right around where I closed my short. I don't remember the exact price, but what I'll do is I'll throw this screenshot on for you guys, and you can see that we took a position somewhere around here. The context is pretty simple. This is a you could buy, you could sell scenario. It was very hard to read. The continuation down was higher probability. However, as price evolved, they showed us that buyers are in control. So it ended up being like a 20-30 pip loss, which is pretty minor. So the first entry was to somewhere around here. And again, you guys could check out the screenshot to see where I actually got in. So price kind of pulls back here, and I think as price was heading up, I want to say we ended up taking one more around here. So my initial targeting was quite a bit higher. Had a couple of targets here. So my first target was 50 of this whole range because it's running inefficient. So the first target was here. The second target, which is this guy coming down. Actually, this is backwards. The second target that was possible was just coming to the 618. And oddly enough, this lines up with the 618 rhythm we've had going on for a few days. And oddly enough, you're lining up with that peak and valley rhythm that you had up here. Sometimes you get your rhythm off watching reactions and not just fib levels. Anyway, the initial target was somewhere up here higher. As you'll see in the screenshot, we ended up closing it out early. So I think I want to say we closed around here somewhere. Again, you guys can check the screenshot for exact shots. So this situation was a bit sad. We did short this from the very top. I took two shorts from here. They went about 450 pips in profit together, and ultimately I ended up breaking even on these. That was a bit sad, but it happens. We didn't do anything else this week. So now I want to talk about where price could head the rest of the week and why. So I have a couple of possibilities. First one being we come down, test this 786. Second one being we come test the 2520 daily level. These are heavy levels of liquidity. Generally speaking, I believe we have a liquidity cycle being built here. The question is are we going to short from here because we've now rebalanced this range, or are we coming to the 618 and maintaining that rhythm, which is very possible. In a perfect world, I would like to re-short from this level come Monday, Tuesday, and target here. We just had the Trump tariff news come out, and they're about the BRICS nations, so there's a good chance the market opens and does something like that. It's hard to say, but I believe by Monday or Tuesday there should be a good trade lined up. So that to me is, again, kind of the scenario. First target, second target. Good chance this level holds. If it doesn't, this is the next target. And then from that point on, whether it's here or here, I expect our fundamentals to realign bullish and to continue up. We are approaching low volume territory in December, so I would expect more stuff like this, as we haven't built a proper buy order yet. This is likely a buy order, and then we'll probably come down, do something along like that, another buy order, and either price goes up or it comes down here and builds another buy order. And ultimately, at some point, we'll fly, and they'll just have multiple stages they built buy orders at for the real move of pushing this above 3,000, probably in the first quarter of next year, I imagine. But yeah, I hope you guys enjoyed this video. Ultimately, this is where I see gold going, and the fundamentals will decide when any Middle Eastern tensions, any of Trump's wild tweets, such as the BRICS tweet he just sent about 100% tariffs, any of the Syria, Ukraine, Russia, Israel stuff has the potential to move prices. So that's going to be kind of our catalyst to pay attention to, as we've obviously seen. So this move here was all Russia-Ukraine news. So that has the potential to drive us at any point. Anyway, guys, I hope you enjoyed this video. And if you already haven't, definitely subscribe. And I will see you in the next one.